What's up everybody, welcome back to cilinixfxcapital. Hope you're all doing great and welcome to this video. It's a little bit of a different video than what I usually make, but nonetheless it's a very important one in my opinion. And before you click away, if you don't know my channel and you think like, well, we can never be bullish, especially not after the crash that we've had, I understand. I am going to make a case though why we could still be bullish in April and May. We don't necessarily have to be, but I think I make a strong case of how we could still be that. An economic case, so merely based and mainly based on the economic situation in the US. But that's it's a big determiner of what crypto is doing. So I'm going to make that case now. If you want to discuss anything, let me know. I'll also, in the end, I'll give my full conclusion. So if you want to skip to that, you can. But I think you'll miss a lot of value. All right, so yeah, let's get right into it. What I wanted to do is kind of go over a timeline of economic events and kind of see why we dropped down like this. There's a clear reason for that, apart from the bearish fundamentals already in the crypto markets. I mean, obviously with Silvergate crashing, that kind of thing. That brought a lot of bearish momentum, but there's more to it. So the first thing I wanted to start with is this. As I said, we'll be in a timeline. I think this is pretty valuable. So the one thing that really that really kicked us off into a different economic ecosystem, because in January inflation rates were dropping more than we expected, and they were becoming a little bit more dovish with the monetary policy that perhaps they could stabilize the interest rates. This is all about the US, by the way. But even if you're not from the US, it really it makes a big impact in crypto. So what happened the 14th is that the inflation rate went down, but less than expected. So that was already pretty bearish if you take a look at the economic circumstances. The price though went up. And this is pretty. This is a pretty weird move, right? It seems like institutions buying in. It's pretty weird that after a bad event, because higher inflation rates are bad for crypto, so higher than expected is usually also bad. So that was pretty weird. But then we go on to we have a time of really not anything of importance. I mean, we have initial jobless claims, and they are less than expected, which is again that's pointing towards that. More people have jobs, so more people spend money, so inflation rate is probably will probably go down a little bit less or go up. But then what we have is the 22nd of February, we have the FOMC minutes, right? So kind of about monetary policy. This is actually quite neutral, right? They don't say a lot, so that's why also it's the 22nd of February. That's why we also become a little bit bullish because of that. We go up a little bit. However, we're followed by a bearish move, and that is because the 23rd of February, we get the, again, initial jobless claims. So more people have jobs, which is bullish for us, but it's usually pointing towards that we'll get more inflation. So that's lower than expected, which causes Bitcoin to drop back down again. Then what we get, and this is really a big event, the 24th, we get the price index and the core price index. You don't need to know what it is. You do need to know that the Federal Reserve watches this closely. And what is it? It's higher than expected. And the PCE price index year on year is also higher than revised, higher than the previous. So this is very bearish. This is kind of like inflation, and it seems like the core prices, so kind of a part of the inflation, is going up again. So that's bearish. So the 24th, right here, we drop down quite heavily. Then we go on to the 2nd of March. We have a time where there's not a lot happening. Oh, excuse me. A time where there's not a lot happening. Then the 2nd of March, again, we get those, or wait, no. Oh, this is the 1st. Again, we get those jobless claims. Again, lower than expected, which is bearish because that means that there's probably more inflation to come. Or at least that it drops down by less. So what happens after this, March the 2nd, we drop down again. You see how much it's reacting to the economics of the US. It's pretty crazy, but all right. Then the 7th of March, last week, what we get obviously is the testimony by Jerome Powell. Here he is more hawkish. He says that maybe the interest rates need to rise a little bit more or stay high for longer. So you can see that how in 1 month the whole economic climate in the US at least has changed and what that has done for Bitcoin. At this point of time, we're down. We're down to 22,200. Whereas after that initial jobless claims, we were still at 24,000. So right now, what we're expecting is that, all right, interest rates go up more. They'll stay up for longer. Perhaps inflation is still rising and we're going to get into a recession. That was the sentiment last week and perhaps still even now. Then we get a lot of bearish fundamentals for crypto specifically. So Silvergate, regulation, all sorts of things, a lot going on. You probably have not missed it. So we drop down, we crash. I would call this a crash. But then today happens. This just happened 17 minutes ago. We get this. Non-farm payrolls, kind of jobless claims, but then different, and unemployment. And what is it? It's, oh, excuse me. This is the old one. And what is it? And this also, it's higher than expected. So more people are unemployed. And this is, the non-farm payrolls are also way higher than expected. So it's just altogether, I mean, especially that unemployment rate, what we were expecting with less initial jobless claims and stuff is that more people were employed. More people employed usually means more inflation. What this means is that it's not true. So perhaps, and that's why I think we can become bullish in April and May, perhaps it is turning around. And that depends. So as I said, right now we have a thought that it's hawkish, inflation is going up, we're going to be in a recession. But if the unemployment rate is going up, what's going to happen, and this is very important, is that next week, the 14th of March, we have the inflation rate and the core inflation rate. This is important. The forecast right now is 6%. If this is actually lower than 6%, which is now again possible, then we will first of all become bullish. But second of all, we could actually have some sort of a turnaround. Because what Jerome Powell says, and I know this is a lot of information, but bear with me. What Jerome Powell said in his testimony last week is that the result of the interest rate in March the 22nd, so that still takes some time, the result of this still depended on the employment rate, non-farm payrolls, and the inflation rate of next week. So if they are all pointing towards that inflation is decreasing, then they will shift from a more hawkish stance to a more dovish stance, which is bullish for crypto. And especially that change sometimes can cause a rally. Now, that's why I think we can still be bullish in March and May, or in April and May. Now I know that the fundamentals for crypto have changed. We've had a lot of bad news, and that's why reaching 25,000 perhaps is a little bit too much to ask. But I do think that if the inflation rate is actually lower than expected, we can get up to 23,000 again, and we'll see from there. That's my full video, a little bit long, but I think it's valuable. So thank you for watching, take care, and if you have any questions, let me know. Bye.